Global stock markets have plunged over fears about the coronavirus, and a conflict among major oil-producing nations has sparked a crash in oil prices. They collapsed 31.5% at the start of trading. Brent crude now only costs $31 a barrel. That's the lowest price since January 1991, at the start of the First Gulf War. So this contributed to a collapse on Asian stock markets on Monday. On the leading stock exchange in Tokyo, the Nikkei fell by more than 5%, while the Hang Seng in Hong Kong lost almost 4%. Meanwhile, here in Germany, the DAX has tumbled almost 8% at the start of trading, though it has since recovered a little bit. DW financial correspondent Chelsea Delaney joins us from Frankfurt, Germany's financial capital. Welcome, Chelsea. How nervous are the markets?
I think we've really moved beyond nervousness to real fear-driven trading. One investor described waking up to markets this morning as waking up to Armageddon. People are really quite shocked by the magnitude of the moves we're seeing in markets today. It's by almost any measure the sharpest declines since the financial crisis, but in some cases since September 11th, 2001. So these are really significant declines for global markets. Investors had already been really nervous coming into this week. Over the past 2 weeks, there's been a lot of volatility in financial markets because of the spread of coronavirus and the economic worries about the containment measures and what kind of impact that's going to be. And now you have to add into the mix a price shock for the oil market, which is also going to have a widespread economic impact.
None of which sounds like good news for the various economies around the world.
Definitely not. Yeah, it's hard to find any sort of silver lining at this point. The talk today is, again, really about a global recession. If you think just about coronavirus and the impact that is having, the news over the weekend of these extreme measures that they're taking in Italy to help contain the spread of the virus, there are already a lot of countries that are really economically weak right now. So Germany, Italy, Japan, all very close to recession. If this virus continues to spread, continues to disrupt business, if we continue to see tourism just plummet the way it has, more supply chain disruptions, consumers stopping spending on things like that, that could really tip a lot of economies into recession. And now you think about the oil price decline, that's also going to add a lot of pressure onto oil exporters. So the Middle East, emerging markets, the United States, which has become a really big player in the global oil market, that's really going to have a ripple effect on the global economy.
Chelsea Delaney in Frankfurt, thank you. Well, the number of coronavirus cases around the world has now surged above 107,000. But there is some good news. China has reported no new locally transmitted cases outside Hubei province for a second day, meaning the number of new infections in China is now falling. New infections are also stabilizing in South Korea. German efforts to contain the virus include calling for the cancellation of events expected to host more than 1,000 people. And in the US, a cruise ship with a number of infected people on board is due to dock in California. The ill will be hospitalized and the rest taken off the vessel and asked to self-quarantine. Now to Italy, where the government is enforcing major restrictions on movements. More than 16 million people in the north have been sealed off from the rest of the country. No one's allowed to leave or enter certain areas without good reason. The quarantine affects the region of Lombardy and other northern provinces, including the cities of Milan and Venice. Italy has the most infections outside China. Recent figures show 7,375 confirmed cases and 366 deaths. Tourists have been told to leave affected regions immediately. And for residents, daily life will be severely restricted for nearly a month.
Roadblocks like these could become a familiar sight across northern Italy. Travellers are asked to explain why they're leaving the so-called red zones. Authorities say only those with serious reasons, as well as workers, will be allowed to pass. In Milan's normally bustling centre, only a fraction of the usual crowds, leaving traders worried about their livelihoods.
We've been empty all day and haven't served a single meal today in the restaurant. At this moment, there's an economic impact everywhere in the galleries and in the whole center. I think that not only Milan is closing down, the whole world is closing down.
There was confusion at airports and train stations as some services continued to run. Officials are still figuring out how to implement travel restrictions. Residents are adjusting to life under lockdown.
We have to remain positive and calm and live the best way possible, taking all precautions. We have to adapt our lifestyles, but we carry on.
To be honest, I think this measure is too restrictive. Closing down the whole region of Lombardy seems like a much too strong reaction.
Top league football games are continuing, but in empty stadiums. Queues quickly formed at supermarkets. Authorities have told residents not to panic buy, insisting supply lines will be kept open. Panic took hold in several prisons. Inmates rioted over new quarantine restrictions. At least one died in the chaos. The number of infected persons continues to rise. Health authorities insist the caution is necessary.
There are no parts of Italy that are completely immune to the virus. There are parts of Italy in which the virus currently circulates less. But the fact that the virus circulates depends on our behavior.
As Italy's tourism centres empty out, the World Health Organization has praised the government's bold and courageous steps, which other countries may soon decide to follow.
So let's get the picture from one of Italy's affected areas. Freelance journalist Silvia Baccardi joins us from Milan. Welcome to DW. How are people coping with the quarantine?
Well, the feeling today, I think, is a bit more sad and depressed than it was yesterday. We're starting to understand that this is going to be a long journey, and it's sad to be at home. But at the same time, people are also starting to understand that this is like a very drastic measure in order to help the health public system, because there are not enough intensive care spots that we can actually use. So this is like a very important measure that we need to put in place.
And we saw in the report, we touched on the effect on business. How is the quarantine affecting businesses there in Milan?
Well, I haven't been out, of course, because I can't, but I've seen that many shops, I've seen the past few days that shops are quite empty and restaurants are quite empty, cafes are mainly empty. But the government has assured that we're not going to have any problems in importing goods, in letting goods pass through this area that is now called the orange area, is not red anymore. Meaning that goods can pass by the borders, and people that actually want to work outside, if they have like a work reason, they can travel outside the orange zone.
And so what is the government doing to try and offset the economic impact of this outbreak?
Well, Giuseppe Conte said, our Prime Minister said that he's going to spend 7.5 billion euros in helping the companies and the families that are affected by this. But he also said that at the end of this, shock economic measure will be put in place. He talked about Genova model, which was the model that was put in place right after the Morandi Bridge fell a year and a half ago. Meaning that it will try to stop political fight and contain bureaucracy in order to put new economic measure in place.
All right, good talking to you. Try and stay safe. Silvia Baccardi in Milan, thank you.
Thank you.
Well, Germany has recorded its first coronavirus death after one of its citizens died in Egypt. In Germany itself, the number of known infections has surpassed 900, with the country also increasingly worried about the economic impact of the outbreak. To stop the spread of the virus, Germany's health minister Jens Spahn has called for a temporary ban on all gatherings of more than 1,000 people.
Actually, what we did not say.
Well, joining us now to talk more about the coronavirus and how Germany is dealing with it, we've got our DW political correspondent Nina Hase and Gerhard Elfers from DW Business. Good to see you both this morning. Nina, let's start with you. Germany's political leaders held crisis talks about the coronavirus late into the night. What did they decide?
Well, one of the major decisions is, of course, this official recommendation by the German government to cancel big gatherings of more than 1,000 people. That is definitely a big change in tone. It is still up to regional lawmakers and organisers to implement this ban and to have the final say, but they've already said that it comes very close to being an official order by the German government, and so that is definitely something that we didn't see last week. Then, of course, they also agreed to implement a big aid package for the German economy because there is big concern that this might affect the German economy really strongly. And so there will be liquidity packages and short work time agreements will be made easier for companies, so they will be compensated if they decide, for example, to keep their employees at home.
So public health is obviously the first priority for the German government, as it is for others, but the economy, Germany has an export-driven economy. This is a worldwide crisis with the coronavirus. Gerhard, how is the coronavirus expected to impact the German economy?
Well, it is already impacting the German economy very much. Mainly, of course, the airline industry, anything connected with travel. People are staying at home, meetings and gatherings are being cancelled, people are not going anywhere. So the airline industries are already asking the government to provide some money. But that's not the only problem. One is containment, the containment measures. The other problem is China. China is, A, not buying anything at the moment because they're not producing anything. They're not buying any cars or anything. And secondly, many German companies and many companies around the world rely on China for their supply side, and they're just not getting materials and parts out of China. That is hitting the economy hard. On the plus side, though, what Nina just said, the aids for the German economy, Germany has a big budget surplus, so the money is there in a unique position there.
Nina, Germany has around 900 confirmed cases of coronavirus so far. Can the German healthcare system cope with a rapid spread of the virus?
Well, whenever I followed those press conferences last week, it was very clear that the German health ministry is extremely proud that the numbers in Germany are comparably low still. If you look at Italy, it's a completely different story. And here in Germany, the authorities say that they're proud that they have managed to keep the numbers low for a relatively long time, especially in those crucial first weeks, because that bought them some time to find out more about the virus and to find out where they needed to concentrate their efforts. And so this now, they say, has made the health system fairly resilient to that crisis. Of course, everybody is asking themselves, what do we do if everybody gets sick at the same time? Is that still something that we can cope with? And so, of course, that is why people are trying to contain the virus as much as possible still. And there's also an export ban on crucial medical equipment because people have found that some of those special equipment that doctors need to deal with sick patients at home, that they were exported abroad, and that is no longer a situation that Germany can afford.
The coronavirus is making itself felt around the world in all aspects of life. This is reflected in the oil price, Gerhard. I understand there's been a 30% drop in the price of oil attributed to the coronavirus.
Yeah, well, the corona crisis actually triggered that because especially demand in China is way down, and that if demand goes down, prices go down. Now, last week, they had OPEC and OPEC Plus, OPEC and Russia, the two biggest exporters are Saudi Arabia and Russia. They tried to cut production, to cut the supply side, to keep prices stable. They couldn't agree to do that. And so Saudi Arabia started a price war right in the middle of this corona crisis. Not a good idea, the world economy thinks. The world economy, at the moment, if you look at the world economy as a patient, and oil is the lifeblood, there's a severe drop in pressure right now, blood pressure right now in the world economy, hitting a patient that is already infected with the coronavirus. So this is very, very serious, and we should keep having a look at it.
Gerhard, thank you so much. Gerhard Elfers from DW Business and Nina Hase, our political correspondent. Thanks to you both.